See, it's live.
Hello, everyone. My name is Nick Good. I'm the founder of the Good Home Team. So while we give a few seconds to let people join us here, while you're watching this, we're going to be covering just some great lending products for first-time homebuyers or people that are renting that don't have a huge down payment. So if you're watching this, hit the like button, the love button. Ask questions, whether you're watching this live or the replay. Go ahead and ask questions because we'll have Michael DeBacker here with the core team answer them when he's able to or when we get off this. And please subscribe, make comments, love it, like it, share it. Type L if you're watching it live. Type R if you're watching the replay. So my name's Nick Good with the Good Home Team at Keller Williams. Been in business since 2006. We sell roughly about 200 homes a year and increasing. And we wanted to talk more about first-time home buyers and or people that are renting because we are seeing first-time home buyer programs. We're seeing first-time home buyers at an all-time highest level since 2005. So further ado, Michael DeBacker with the core team at Supreme Lending. Give us your 60-second overview of who you are.
I appreciate it, Nick. And I want to make sure you've kind of froze up on my end. Can you hear me okay?
I can hear you. Yep. I look frozen in the screen, but I can hear everything.
All right. Just making sure. So thanks for having me on, first of all. And yes, again, my name is Michael DeBacker. I'm a senior loan officer here at the core team. There you go. You unfroze there a little bit. But
yep, for a second.
I've been in the business now. It's 10 and a half years now. Time flies, I guess, when you're having fun. But here at the core team, what we really pride ourselves in is just how efficient and fast we are at being able to close your loans. We've got everything that's in-house from our myself, my loan officer assistant, the processing team, the underwriter, closer funder. It's all right here. I've seen the good, bad, and ugly in the business. I've worked at a few different companies over my time. And in my opinion, there's just nobody that does it better here at the core team. And thrilled to be here and thrilled to be on the podcast here with you. Or Facebook Live, and just happy to share any information that I have for you.
Awesome. I love it, man. Well, tell us a little bit more about the type of loan products that are available for a first-time homebuyer or renter who, by the way, the average rent here in Collin County, Dallas County is roughly a little bit between $1,500 to $1,550 a month. So tell us a little bit about some of these lower down payment programs, some of them down payment assistance, zero down stuff. So kind of walk us through for the people that don't know, don't use any of your higher intelligence loan officer lingo. Just kind of dumb it down for us.
Sure. So there are a lot of great product out there. One of the things I always kind of chuckle at when I talk to a client and I ask them, hey, how much do you want to put down? They say, well, I need 20%, don't I? And, I only chuckle because I've been doing it for 10 years and I know of all the different options. But that is, unfortunately, with what we've created in this business, we've made people believe that that's the case. And it's so far from the truth. You guys can get into a house with far less down, and sometimes no down payment is required. And so we have various programs that we work with. Just from a down payment assistance standpoint, you have the T-Shack program, there's the TDHCA, the SETH program. There's also the USDA loan. So if you're looking at buying a house in a rural area, that's also 100% financing. It's not in the down payment assistance category, but it's 100% financing and allows you to get in for very little. Now, I do want to be clear, you do still have some closing costs, and you'll have escrow, which is property taxes and homeowners insurance that you'll have to pay for. But again, if you can get into a mortgage without the down payment itself, it's really going to reduce your total out of pocket and make the home buying dream really manageable for you. So there are lots of good options and opportunities for first-time home buyers these days that many loan officers truly just aren't utilizing. These down payment assistance, they get a bad stigma. To me, people are afraid to use them. They're easy programs to use.
Good, great. And so tell us a little bit more about what's other than some of the USDA, which is a great program, by the way. And that means, sure, some of these areas like Anna, I think still qualifies. Some of the properties further north in Collin County, and then in parts of Denton County. And then I believe Heartland out in Dallas County still qualifies. But tell us a little bit more about some of these down payment, the lower down payment, FHA's 3.5% down, right?
Yep.
How much can you go up to on an FHA? Do you remember what the loan limits are?
Well, the actual FHA loan limits are up to, and it depends on the county. So I have to be clear about that. But your major counties, you're calling your Dallas, Denton, I believe it's 386 and change. So you can get up there quite a bit. Now, one of the caveats with down payment assistance and USDA for that matter as well, there are income caps on there. And each one's a little bit different. It's not blanket across the board. So we do have to be mindful of that. But outside of that income restriction, it's still very loose qualifying guidelines. A lot of those down payment assistance programs are funneled through FHA. Some you can use with USDA as well. So if your debt to income ratio is on the high side, it's okay. The programs are still flexible. But yeah, USDA is a great option as well. And mainly those areas that you're talking about are the ones that we're going to look at to qualify someone. If ever you're curious, you can actually just Google the USDA eligibility map, and you can see the parts of town that you are eligible to use that type of program.
Great, and so you wanted to make sure that us to mention about there's even a conventional loan, so it doesn't even have to be government loan products that has a low down payment. Talk about that.
Sure. So one of the things that some buyers can run into, depending on the price point, depending on the property they're looking at, is a seller or listing agent may say, hey, we're only accepting your offer if it's a conventional offer, especially if you're in a multiple offer situation where it's you versus 5, 6, 7 other buyers. And there are maybe some price points where that still exists. But there's ways around, again, that stigma of 20% down, even if we go with a conventional loan. There is the Fannie Mae Home Ready product and the Freddie Mac Home Possible product. They're very similar, very minor differences, a couple tweaks here and there, but both of them are a conventional loan with 3% down. Now, the caveat with this specific program, again, we kind of run into that income restriction. There can be an income cap. However, unlike USDA is based on the map. You can use the USDA loan if you buy in a certain territory. These Fannie Mae, the Home Ready and Home Possible programs, they're similar, but it's based on census tract. So what can be difficult is if you do make, say, $80,000. Well, if there is an income cap, it's usually about $73K. So in a general situation, if there is an income cap, obviously you're out of luck with the 3%. We would look at a 5% conventional option in that case. However, once I know what property you're looking at, I plug in the address to either the Home Ready or Home Possible website. And depending on where it's located, there may not be an income limit at all. So you could literally make 100, 200, 300,000 a year and still utilize that type of product. So it's a wonderful program. And again, I just think a lot of loan officers are failing to utilize. Very simple in terms of qualifying procedures. The documentation is really no different, just a couple minor tweaks again here and there between the two options. But it's something that I utilize quite a bit for my clients.
Love it, love it. And I do know I'm frozen, so I appreciate some of the feedback on that. So we can hear you great. So it's all about you, Michael, anyway. So
you look better when you're not moving. So you're
yeah. There's some weird. I can see the reflection, and there's some weird looks that's going on. But if you're watching this, watching this live, type L. If you're watching the replay, hit R, and go ahead and just ask questions away. I do want to get into credit scores, right? So
sure.
There's when we're talking and sending people over to you, a couple things typically come up, and usually what comes up is they're working on their credit, or they don't have any money or enough money, and so what we typically will help them with is discuss the down payment assistance programs with them and get them over to you, and then also talk more about credit scores, because when it comes to credit scores, a lot of people think they may have poor credit.
Yeah.
Then they what they're doing is it may actually be in the qualification realm, right? So tell us more about what's good credit, what is qualifying credit in order to qualify for some of these programs, and what's bad credit.
Sure. So a lot of this, of course, just like anything, is very relative. So bad credit, I would say really anything right now below 580 is going to be a struggle for you. Now, one of the things is, Nick, you and your team know, I am happy to work on a client's credit. I have the simulator tool that I use. I can't say it's 100% guaranteed to work, but it is a high probability that if someone has a credit score around 550, 560, and I take a look at that credit, oftentimes there's an opportunity for us to quickly boost those scores up to get them into that credit score range where we can get them qualified. So in terms of FHA right now, we at the core team specifically are lending down at a 580 credit score. Now, ideally still, even though we can lend at 580, where I would want my clients to be is a minimum of really 620. And the reason why I say that is there can be additional guidelines that we have to be mindful of, a little more restrictions when you're below that 620 mark. So I think 620 is a good benchmark to get started. Anything above that is just kind of icing on the cake for us. When you get to that 680 credit score range, where we start to see some improved pricing in terms of interest rate, but also your cash needed at closing. When you get above that 700, 720 mark, okay, even better. And then if you're looking for kind of that premium tier, that top tier pricing, we're going to need you above 740 or higher. Now, a couple more things here about credit. I hear this a lot. In fact, I had a long conversation with a client yesterday about this, and they said, well, I really want to wait to build up my credit so I can get the best rate possible. And I completely appreciate that sentiment, and I understand the thought process behind it. It makes sense. However, what we can't control is the market. If you sit back and you build up your credit to get a hypothetical lower interest rate, you have to assume then that the market would stay the same or improved. But what if the market gets worse? If the market declines and the rates go up, it doesn't matter that you built your credit up. You're now looking at higher rates than what we were originally talking about if we just would have, bought at that time. So sitting back, if you really want to buy right now, sitting back to building up your credit is not always the best idea. But what I recommend is you always talk with the loan officer, get their take on where the market's going, what their credit scores are, what the different options are, and it'll help guide you in that case. The other thing I run into a lot when I talk to clients, and one of the early questions I ask them is, what do you think your credit scores are? And they always, they'll give me a number, what they think it may be. And the next immediate question to follow is, where are you seeing your scores? I'd probably say 80% of the time they're using Credit Karma. Credit Karma is a wonderful tool. I have nothing bad to say about Credit Karma itself. You can manage your credit. You can see the good, bad, and ugly about your credit. It even, I believe, has some simulators on there as well, and it's free to use. This is not a Credit Karma promo, but the point being is Credit Karma also doesn't use the same scoring models that a mortgage lender uses. So when you're seeing a score, say 660, 680, a lot of time, not every time, but a lot of time, a mortgage lender is going to see something lower than that. So unfortunately, what it does, it sets an expectation for this client that they're going to qualify with no problems. And then when I actually pull the credit, sometimes it's kind of a humbling situation, and it turns into, well, not the most wonderful experience, because at that point they were expecting something better. So what I recommend, again, talk with your loan officer, talk with the mortgage company, and have them take a look at credit. It's the most important thing you can do, because it's going to really be able to, when we get our hands on a credit report early on, it allows us to really assess where you're at and also improve your situation. You don't have to wait again to buy a house to build your credit. You can look for the house while on the back burner. We're building your credit for you. Again, I'm not a credit expert, and I can't claim that I am, but at the same time, I've been in the business a long time that I've seen enough that I think I can help my clients get where they need to be.
What's your take on credit repair companies? I mean, do I haven't personally had seen the most success from them, and we always talk about to our clients just to talk with you and to give some guidance on it, and usually what you can help them with is they're at that 550, 560, 575. Typically, if they follow your directions anyway, within the 6 to 12 months, they're within a qualification range. So what's your thought process on credit repair companies?
Sure. I think credit repair companies, I think they serve a great purpose. I think there is a lot of use for them. But I also think it just depends on where you're at in the process. Again, if you call me up and I take a look at your credit and my minimum credit score is a 580 and you're at a 575 or a 560 and you've got several $1,000s in the bank, and now I'm looking at your debts, your utilization, and your credit cards, and I can say, hey, just pay this down $500 or $1,000. Let's rescore your credit, and boom, you're where we need you to be. But there's situations where a client may be at a 520. They may have a lot of collections. They may have a lot of things that need to actually physically be removed that I can't help with. That's kind of beyond me at that point. So I do think credit repair companies absolutely serve a purpose. And I think that if you can get with a trusted company and a trusted person to take care of you, I think it's great. But at the same time, if you're kind of on the edge there, I don't think it's necessary. But again, it's always relative to the client situation and how much assets they have in the bank. And really, what is wrong with the credit? That's why it's important for us to pull the credit. We have to determine what is wrong with credit for us to be able to guide our clients much better. Absolutely.
And as far as down payment programs or utilizing FHA, can a first-time home buyer or even a buyer utilizing FHA down payment, are they able to get gifts from family members for down payments?
Yeah, absolutely. So it's something that I would advise. One of the things is I tell my clients, the less assistance you need from third parties, and down payment assistance is a third party, the better of a situation or better of an offer you're going to have on your mortgage in terms of just rates and costs and things like that. So down payment assistance, again, serves a great purpose. It'll cover that down payment for you. But if you do have the ability to get a gift from a family member, it's a smoother process in terms of just less documentation because we're not involving a third party. But also I may be able to get you a little bit of a better offer as well.
Awesome. And before we kind of wrap this up, because I do want to talk about, how many homes are available at 200,000 or less, because that's, we were running numbers on it, and it's shocking to look at, all right, how many homes there are for sale at 200,000 or less. And basically that's right around what the average rent cost is. Where can people find you?
So on Facebook, you can find me at The Mortgage Mike. You can also drive to my office. I'm at 75 El Dorado in Virginia, McKinney area. But no, I'm all over Facebook. So definitely find me over there. If you have questions, I'll post all my information here in the question section below. Always feel free to reach out, call or email. I'm happy to help any way I can.
Awesome. And so what my main point of wanting to do this was, again, I was reading, I think the Realtor Association put it out that first-time home buyer ownership has gone or purchases through the first half of 2018 are at the highest level it's been since 2005. And what we're looking at is over the last couple of years, we found that first-time home buyers have been missing out. And so we were talking, before doing this live feed here, and we're like, all right, what would the average person paying in rents? Probably around $1,500 to $1,700. If you were to buy a $200,000 home, and did we do it with a 3%? Did we do it with a down payment on that one? Do you remember?
I did it with the 3.5% down payment option.
So at 200,000, 3.5%, which would be roughly, that's the FHA down payment program.
Correct.
You're looking roughly, and again, this is, there's so many variables that can play in on this one, but you're looking at a $200,000 purchase price, about $1,650 a month in mortgage. Cool. And so when I went and pulled numbers, there are 66 homes just in Collin County alone at $200,000 or less. And that's been an eye-opening experience because we, over the last 2 to 3 years, a lot of our buyers in the 250,000 or under market have been getting beat up. And now there's opportunity for them to get into, there's enough houses to get into them for them to win. You're working with several of our clients right now that are right around that price point. What are you seeing from your other real estate clients? Are you seeing them utilizing this more? Or are you still seeing the higher down payments? What are you experiencing in this market from the lending side?
So DPA or down payment assistance is a bit of a, I wouldn't call it buzzword, I guess buzz phrase these days. There are a lot of people now that are advocating for these programs, and I completely understand why. And it, for years, loan officers, they were always timid to touch these types of programs for whatever reason, to each their own, I suppose. But yes, more and more, this has been the norm. And that's great because the more exposure we have to these types of programs and getting more people into houses, not to get political and economic on you in the long run, but obviously the more people that are homeowners is better for the economy. It's a better situation long term just for us in general.
Absolutely. And David had made a comment earlier before we went live, asking about me going over on how a seller, or how we can get sellers to help buyers break their leases. And we're able to do that, not really helping them to break their lease, but we've been successful over the past 30 to 45 days of getting sellers to help contribute closing cost assistance that will help go into the cost of possibly breaking a lease. So if you are leasing an apartment right now and you have a 4, 5, 6+ months left, get with your apartment manager and see what it would cost to break that lease. And so that when we sit down and talk, or you sit down with your real estate professional and mortgage professional, that you'll know your numbers, so that when you go in to make your offers, you can include that into your closing costs, their closing costs assistance help. So are you seeing a lot of closing cost assistance coming through?
Well, and I was going to turn the tables and ask the same for you, just because you're on the real estate side. But yes, I mean, it is thankfully happening more and more often, just because, again, it helps with our first-time home buyers. It's a way to avoid having to maybe get the gift from a family member, or use a down payment assistance program, or whatever it may be. It puts more money back in your pocket, and it just makes it for a much more pleasurable experience at the end of the day, when you don't have to bring several $1,000s to the closing table for those closing costs. So absolutely, I'm seeing it on more and more contracts, and I'm happy to see those days back. I don't know how long they're going to be here. Obviously, the market is kind of going up and down in terms of how long properties are staying out there being listed. But for now, it just seems like there's a little bit more negotiation room than there has been in months past. And I've said it multiple times. I'm very thankful to see that.
Absolutely. And if anyone's going to listen to my frozen talking head here, now's that perfect time for a buyer to go ahead and jump back in this market. If you were beat up over the last 2 years and you decided to rent, now's a great time to jump back in. It's probably going to last to the rest of the year. Now, what's going to happen the first quarter and second quarter of 2019 is we're still going to go back to that cyclical market. So those are going to be the stronger seasons. So if you're a first-time home buyer, you're going to face a lot more competition because people are always waiting to that first and second quarter of the year to buy. So now is a great time. Eventually I'll get Michael to talk about maybe on the next live, when I'm also not frozen, to ask him where he thinks interest rates are headed, but not this time. I mean, right now we do know that rates are still very low, and that's something we've been talking about even in our mastermind groups I'm in. If you look at the historical average of where interest rates are, they're still at one of the lowest they've ever been in terms of historical averages. Now, over the last 5 to 10 years, it's definitely on the upswing. So we do want to lock people in and help them be able to control their finances, right? So something you and I were talking about, was it earlier today or maybe yesterday, is I bet you if you're renting an apartment or a house, that when you went to go renew it or you moved into a new rental, more than likely you're paying more than you were last year or the year before. And so rental rates are increasing, and there's not any signs of it slowing down. And so that's one of the reasons I'm an advocate for first-time home buyers to get into home ownership as soon as they can, because they can control their finances a lot easier than renting.
And, Nick, one thing I wanted to kind of interject as well, one of the things, we're talking about first-time home buyers quite a bit here, and we're talking about just from the cash to close, the down payment standpoint. But would you agree? I mean, one of the biggest fears that first-time home buyers have is just they don't think they can qualify overall. They're uncertain, and thus creates trepidation. They're a little scared, a little worried that they're going to be told no. Would you agree that's one of the biggest concerns?
I definitely would agree with that, and more on not knowing what kind of money they need down, or they think that they don't need any money down at all, and they could just get into zero down programs, which again are far and few between. So it's one spectrum or the other, whether they think they need 20% down, which is definitely not the case, or the other spectrum of, what happened to those 100% financing days back in 2000, 2006 and previous. So, it's all about education. That's why I want to do more of this and bring you on and talk more about, again, what is, even we didn't even touch VA loans. So if you're a veteran out there, we can talk about what VA loans are, because that's 100% for you guys to get into a home. And again, rates are great. So tell us one more time how they can reach out to you, Michael.
Sure. So at The Mortgage Mike on Facebook. And again, I'll put all my information down in the comment section there. But Nick, again, one more interjection. Where I was really going with that real quick is to alleviate that concern that a lot of my first-time home buyers love is not only do we pre-qualify you guys in the beginning, where we simply talk about your employment, income, assets, we do take a look at credit, but I'm going to collect all of your paperwork, your W-2s, pay stubs, et cetera, whatever it may be, based on that pre-qualification. And we're going to send you through underwriting early on, as if you already had a house under contract. So, again, one of the biggest concerns first-time home buyers have is, will they qualify? They have no idea what to expect. Well, by sending you through underwriting early on, as opposed to waiting until you've spent all that time out in the market looking for a home, made some deposits, maybe paid for an inspection, we can know if there's any issues that they're going to have on their documentation before we get them out there. So it just alleviates all that concern. It gives us time that, again, if we do have any hoops that we have to jump through, that we have time to jump through them and get them into the correct position before, again, you guys go out there for months at a time sometimes, depending on the market, looking for a house, just to be told eventually, sorry, I can't help you. That's the last thing we ever want to do. So we will actually send you all the way through underwriting early on in advance to make sure that we alleviate all those concerns.
Perfect. And we definitely vouch for Michael DeBacker, aka Mortgage Mike. And if I'm looking to refinance, or my next home purchase is definitely going through him. So if I trust him with my own personal business or my family's business, then my clients definitely trust you for that. So we appreciate it, Michael. Again, I know I'm frozen, so leave comments down below since a lot of you are going to be watching this as a replay, and ask questions, share this, and then let us know what you would like to hear from Michael and an ongoing series about financing, because this is definitely, we're not seeing enough of education from the mortgage world to home buyers out there. So again, Michael, I appreciate your time. If you guys have any questions, reach out to him. And if you have a real estate agent, then you can still use Michael. If you don't have a real estate agent, we would love to sit down and talk with you about how we can get you into owning a home, getting you out of renting, or if you have a house to sell, we can also help you with that. We appreciate it.
Thanks for having me on, Nick.
All right. Thanks, Michael. Fucking frozen.
Not happening every time, like.